Yo, what's up beautiful people of YouTube? It's Carlos here, and in today's video, we're going to be talking about the Bitcoin halving and what that exactly is. So stay tuned for that. But before I start the video, make sure you like and subscribe because it really helps out my channel a lot. Thanks guys. So there's this big commotion that's been going around about the Bitcoin halving, but do you know exactly what that is? So the Bitcoin halving is happening on May 11th, 2020. To explain the Bitcoin halving though, we must first explain a little bit about how the Bitcoin network operates. Bitcoin and its blockchain are basically a collection of computers or nodes around the world that all have Bitcoin's code downloaded on them. Each of these computers have all of Bitcoin's blockchain stored on them. That means that each computer has the entire history of Bitcoin transactions, which ensures that no one can cheat the system, as every computer would deny the transaction. In this way, Bitcoin is entirely transparent, and no one can make a transaction without everyone seeing what's happening.
I'm watching you, Wazowski. Always watching.
Even those who don't participate in the network as a node or a miner can view the transactions taking place live by looking at block explorers. Going into the topic of mining, Bitcoin mining is a process where people use their computers to participate in Bitcoin's blockchain network as a transaction processor. Bitcoin uses a system called proof of work. This means that miners have to prove they have put forth effort in processing transactions in order to be rewarded. This effort includes the time and energy it takes to run the computer hardware and solve complex equations. Faster computers with certain types of hardware yield larger rewards. And some companies have designed computer chips specifically built for mining. These computers are tasked with processing Bitcoin transactions, and they are rewarded for doing so. The term mining is not used in a literal sense, but used in a reference to the way precious metals are gathered, like gold and silver for instance. Bitcoin miners solve mathematical problems and confirm the legitimacy of a transaction. They then add the transactions to the end of a block and create chains of these blocks of transactions, forming, wait for it, the blockchain. When a block is filled up with transactions, the miners that processed and confirmed the transactions within the block are rewarded with Bitcoin. Transactions of greater monetary value require more confirmations to ensure security. This process is called mining because the work done to get new Bitcoin out of the code is the digital equivalent to the physical work done to get gold out of the earth. Now moving on to the Bitcoin halving. Every 210,000 blocks mined, or about every 4 years, the reward given to Bitcoin miners for processing transactions is cut in half. This cuts in half the rate at which new Bitcoin is released into circulation. This is Bitcoin's way of using a synthetic form of inflation that halves every 4 years until all of Bitcoin is released and is in circulation. This system will continue around until 2140. At that point, miners will be rewarded with fees for processing transactions that users will pay. These fees ensure that miners still have the incentive to mine and keep the network going. The idea is that competition for these fees will cause them to remain low after halvings of Bitcoin are finished. The Bitcoin halving is significant because it marks another step in Bitcoin's dwindling finite supply. There are only 21 million Bitcoins in existence. At the time of shooting this video, there are almost 18,400,000 already in circulation, leaving just a bit over 2,500,000 to be released via mining rewards. In 2009, the reward for each block in the chain mined was 50 Bitcoin. After the first halving, it was 25, then 12.5, and come May 12, 2020, it will be 6.25 Bitcoin per block. To put this in another context, imagine if the amount of gold mined out of the earth was cut in half every 4 years. If gold's value is based on its scarcity, then the halving of gold output every year would theoretically drive its price higher. These halvings reduce the rate at which new coins are created, and thus lower the available supply. This can cause some implications for investors, as other assets with low supply, like gold, can have high demand and push prices higher. In the past, these Bitcoin halvings have correlated with massive surges in Bitcoin's price. The first halving, which occurred in November 2012, saw an increase from $10 to nearly $1,200. The second Bitcoin halving occurred in July of 2016. The price at that halving was $650, and by December 16, 2017, Bitcoin's price had soared to nearly $20,000. The price then fell over the course of the year from this peak to around $3,200. A price nearly 400% than its pre-halving price. The theory of the halving and the chain reaction that it sets off works like this. The reward is cut in half, which means half the inflation, which means a lower available supply, which turns to higher demand, a higher price, while the miner's incentive still stays the same. Regardless of smaller rewards, as the value of Bitcoin is increased in the process. In the event that the halving does not increase demand and price, then miners would have no incentive, as the reward for completing the transaction would be smaller and the value of Bitcoin would not be high enough. To prevent this, Bitcoin has a process to change the difficulty it takes to get mining rewards. In the event that the reward has been cut in half and the value of Bitcoin has not increased, the difficulty of mining would be reduced to keep miners incentivized. This means that the quantity of Bitcoin released as a reward is still smaller, but the difficulty of processing the transaction is reduced. This process has proven successful twice. So far, the result of these halvings has been a ballooning for the price, followed by a large drop. The crashes that have followed these gains, however, have still maintained prices higher than the before halvings. For example, as mentioned just a little while ago, the 2018 bubble saw Bitcoin rise up to $20,000, only to fall to around $3,200. Yes, this is a massive drop in Bitcoin's price, but the price before the halving was $650. While the system has worked so far, the halving is typically surrounded by immense speculation, hype, and volatility, and it is unpredictable as to how the market will react to these events in the future. More computers or nodes added to the blockchain increase its stability and power. There are currently over 10,000 nodes running Bitcoin's code. While anyone can participate in Bitcoin's network as a node, as long as they have enough storage to download the entire blockchain and its histories of transactions, not all of them are Bitcoin miners. So closing out this video, guys, some key takeaways are: 1. The next Bitcoin halving is on May 11th, 2020. Second, a Bitcoin halving event is when the reward for mining Bitcoin transactions are cut in half. Third, this event also cuts in half Bitcoin's inflation rate and the rate at which new Bitcoins enter circulation. Lastly, both previous halvings have correlated with intense boom and bust cycles that have ended with higher prices than prior to the event.
Hold up.
Real quick before I let you guys go, if you want 2 free stocks, make sure you click that link in my description. Webull will be giving you 2 free stocks when you sign up and deposit your first $100, with one of these stocks being valued up to $1,400.
Oh my God!
So if that interests you, make sure you click that link and comment down below what stocks you guys get. As always, share this video if you found it helpful. Thanks for watching, and until next time.